Alright, good day, ladies and gentlemen. My name is Anyam Israel Uchechukwu, and I'm your Forex coach. I'm the CEO of Trading Muguru's Academy. So, on this video tutorial, we'll be talking about how to actually know when to buy and sell using entry and exit strategy. For this video, we have 5 things that we'll be looking at. That is to say that our trade will need to pass these 5 steps before we can take a trade. So please, if you are new to our YouTube channel, kindly subscribe to our YouTube channel right now. Turn the bell notification icon to always get notified whenever we post a new video. Thank you. So now, no matter which market you trade, be it stock, be it forex, be it futures or synthetic, each second the markets are open provides an opportunity to trade. Yet not every second provides a high probabilities. Put each trade you consider through a 5-step test. So you only take trades that align with your trading plans and offer good profit potential for the risk being taken. Apply this test whether you are a day trader, swing trader, or an investor. At first, it will take time. It will take practice, but once you become familiar with the process, it will only take you few seconds to see if what trade passes the test, telling you whether you should take a trade or not. Only take a trade when it passes these 5 tests. Number 1, identify the market structure. Identify the structure of the market. Now, when it comes to trading, there are only 3 types of market structure we are working with. It is neither the market is in an uptrend, and here is the picture of an uptrend, or that the market is in a downtrend. Here is the picture as well, or that the market is ranging. So now the simple question is this: are you able to identify the phases of the market when it is in an uptrend, when it is in a downtrend, or when it is ranging? Are you able to identify the market in a few seconds? Now, let us use a clear chart to actually explain whatever it is we're actually going with. Now, when you're able to identify the market structure, looking at this New Zealand dollar versus the US dollar, you can clearly see that at this point the market is actually bearish. Okay, the market is actually bearish, and when I'm talking about this space here, okay, our market is actually bearish. Okay, now once you come into the market and you look at the structure, you're able to identify the structure that it is in a downtrend, creating lower low, lower highs, lower low, lower high. All you just need to put in your head or put in your mind is that you are selling. You don't need to start buying. You are selling this trade. Period. You don't need to start looking for weak rejections. You don't need to start looking for other blocks. You don't need to start looking for supply and demand zone. No. The moment you see something like this, all you just need to do is to take a straight sell, wait for the retest, and then you plan your trade. That is the only thing you need, because in forex people say that knowledge is power, but I would tell you that in forex too much knowledge is poison. So get this straight here, guys. Once the market is in a downtrend and you notice it, all you just need to do is to sell. Okay, so our next example here is an uptrend market. An uptrend market. Now you were able to identify the trade that your chart is in an uptrend. What do you need to do? You buy. Once you're able to identify that your trade is actually making a higher high, higher low, higher high, higher low, all you just need to do is to look for a perfect entry by waiting for a retest, drawing your trend line, and taking a direct buy. You don't need to start looking for weak rejections. You don't need to start looking for supply and demand, because when you begin to apply those things, that is when emotions will take over you. So when you look at this circle here, you can clearly see that this is actually in an uptrend. And at this point, you don't need anyone to tell you anything. You just need to buy. Just follow the trend. That is the only way you can be successful in this field. Okay, so this is actually a 1 hour time frame. There's no too much jargons here. There's no too much things to look out. Just identify the market structure, and this is a clear uptrend. All you need to do is to buy, period. Okay, I hope what I explained here is well understood. It is easier to lose a trade that when you planned a trade than to lose a trade when you think it's a good trade and it is not a good trade. Now this brings us to the second thing we have to watch out for. Number one, we've talked about identifying the structure of the market, and number two, now we'll be looking at identifying our key level. Now we want to make sure that we are marking out our major level, that we are marking out our intermediate level, and that we are equally marking out our target level. We'll be taking a look at another example with a live chart. Alright, so right here we'll be looking at this example using crash 500. This is synthetic actually. Crash 500 on a daily time frame. Okay, on a daily time frame. The first thing we did here was to actually identify our market structure, which we can clearly see right here that the market is actually creating lower low, lower highs, lower low, lower highs. Okay, now we were able to identify the structure to be bearish. Now what else did we do? We started marking out our levels. We started checking our key levels, watching our levels, marking out our intermediate level, our major level, and our target level. Now, having seen that the chart is actually bearish, what did we do? We went to our 4H time frame to look for an entry, because at the daily time frame it is actually creating a lower low, sorry, it is actually creating a lower low, lower high, lower low, lower high, lower low, and here it is retesting back. What did we do? That was when we had to look for an entry. So from the 4H time frame we were able to get an entry right here. This was what we took very early in the morning today, around 9 o'clock a.m. I posted it on the VIP group. So all right, so we were able to identify the market structure. That's number one. Now we started marking out our key levels. Now, in terms of what is our key level, when selling in a downtrend, our major key levels are always going to be our lower high. Why? Well, in a downtrend, as we can clearly see from the chart, recently, if the market is making a lower high, after a lower high, we are expecting a lower low. Only till a major lower high is broken are we anticipating or waiting patiently for the trend to change. So as long as the market is respecting the structure and has not been broken, we are looking for sell. The only time we look for buy is when the market breaks the structure. So when the market comes back to our major key level, which is this one here, we have to wait for evidence and confirmation of market showing us or giving us sign to take a trade. So why did we take this trade or took this trade in the morning? It was because there were multiple rejections around this level. There are multiple rejections around this level. So what we have here, we have multiple rejections. As you can see, price have been creating multiple rejections, indicating a bearish SMS, and that is why this trade was taken. Right, so now we need an intermediate level. Our intermediate level is where the price is creating a support level. And now at this point, the support we meant is not a place where we'll start looking for a buy. No, it's just the minor support level where we see multiple weak rejections, which is this one here. We had multiple weak rejections here. So this is where we fished out our intermediate level. So this is our intermediate level, and here marked out is our major level where we are looking to get to, and this is our target level where we are expected to take our profit. And at number 3, we have identifying the phases of the market. Now, identifying the phases of the market, in my own opinion, is the holy ground of Forex trading. So if you're not familiar with this, you have to get familiar with it right now. But in this, there are certain rules. There are few rules we have to stick to. Well, we all know how an uptrend moves: higher highs, higher lows, higher highs, higher low. We equally know how a downtrend move: lower low, lower high, lower low, lower high. And we equally know how a range market moves, just moving within a range. Now, when it comes to an uptrend market, you do not want to buy at the push phase. You only buy
at the exhaustion phase. What do I mean? You do not want to buy when the market is going up. You only buy when it is retesting. Okay? When it is retesting. Now the next one is what the downtrend. You do not want to sell when the market is in a push phase as well. For you to buy, you have to wait for the exhaustion phase. You have to wait for the market to retest back. You don't just jump in straight. No. You have to be confident about your trade, because when you looked at it and you're able to plan, that is only when you become successful. Next is ranging market. Now, when the market is ranging, you are expected to do nothing. When the market is consolidating within a certain range, all you just need to do is to stay out, go and play game, go and have fun. Just be calm, allow the market do its things, and the moment it plays out and gives you a reason to buy or sell, only then can you take a trade. I hope I'm making sense here. So at number 4, we have identifying the trading pattern. Now, there's nothing worse than a trader trying to trade all the patterns in the market. Please listen to this again. Listen to what I'm trying to tell you. You only need 2 to 3 patterns. In fact, you only need just one to be successful. Trade is all about being patient, waiting for the trade to come to you. The more you know, as we've mentioned in the beginning, the harder it becomes for you to execute a trade, because you begin to you continue having doubts if the trade is gonna play out or not. But what you need to do at this point is to add these patterns to your trading plan to know which pattern to trade whenever it forms. Now, these patterns here are not new to you, so I'm not trying to teach you something new. It's just something that will help you in your trading career, something that will change your life for better. Now listen to this. Once you've identified the direction of the market, you've drawn your key levels, you've understand the phases of the market, these are just the foundation. At this point, you are ready to trade. All you are waiting for is for these 3 things to line up. Once your pattern develops, the next thing you are looking forward is to buy, is to take a trade or sell. Now, as you can clearly see here on the picture, you can actually see some of the. Now we look at this closely, you will notice that there is nothing like A, B, C, D, E, F, G here. Okay, there's nothing like 1, 2, 3, 4, 5, 6, 7 here. There's nothing like support and resistance. There's nothing like demand and supply zone. There's nothing like other blocks here. This is just a plain pattern, a simple pattern. And these are most of the patterns. These are just the 3 patterns I trade mostly at all time. The triple top, triple bottom, I trade them very well. The double top, double bottom, I trade them very well. And the uptrend and the downtrend, they are one of my best. Okay, so alright, so looking at these simple chart patterns, the triple top, triple bottom, one of my favorites. So when a trade is in an uptrend and after a certain move decide to form triple top or triple bottom, guess what, guys? I'm taking it from there. I'm taking a direct sell. Honestly, I don't miss chance. I don't just lose that chance, because it has worked for me multiple times. Same thing with double top, double bottom. In a downtrend, once my chart forms a double top or a double bottom on a higher time frame, guys, I'm taking the trade immediately. Now, when it comes to an uptrend on a downtrend, once it is in a push phase, I had to relax, watch it, and once it makes a retest, I'm in, because that is the rule. Now listen, you might not be 100% correct at all time. But when these patterns forms, do not forget, people will tell you that whatever the chart is forming now, it has been formed in the past. Okay, so you might not be 100% correct, but if you are 50, 60, 70% correct, come on guys, you're making cool money from this, you're making cool dollars from here. I hope you guys understand this. Please try to put all this into practice. So at number 5, what we have there is putting everything together. From number 1 to number 4, putting them together. At number 1, we said identify the structure of the market. Number 2, we said we should identify our key levels. Number 3, we say we should identify the phases of the market. And at number 4, we talked about identifying the trading pattern. Now, this is a running trade right now on a real account, and we've been holding this trade since yesterday, and I will be showing you people what I meant from the lesson so far. So, putting my trend lines together. Okay, so on a daily time frame, we can clearly see that our chart is actually bullish, which simply means it is in an uptrend, breaking no lower low, but breaking no higher low, but breaking higher highs, as we can clearly see here. So how did we manage to find our entry here? Well, I said that we only enter when the market has or is on its way pulling back in order to get more momentum to push forward. We don't just jump in and buy. We wait for the market to retest. So immediately it retested, that was when we find our entry. So we'll be heading to the lower time frame. Please, if you're yet to watch my videos on how to analyze the market using multiple time frame, I guess I will link the video in the description of this video. I will link the video here in the description of this, so that you can be able to watch it, because it is very, very educative and entertaining as well. So we'll be heading to our lower time frame to see if we can actually find an entry. Now on our 4-hour time frame, we'll be able to find an entry which seems to be a double bottom on a 1-hour time frame, which is here. Okay, all right. So after this push phase, after the push phase, the long buy, after the push phase, it made an extraction phase, which is this. Sorry, which is this, and then pull back again. Now at this point, it still comes back to test this level, and it did not break this level, forming a double bottom, a chart pattern I showed you guys, and that was the reason why we took the long buy at this moment. I posted this trade on my VIP, and currently we are making over $252 using $252 using 0.6 lot size. Okay, so I guess I'm able to actually identify or clarify you people on how to use all these things here. We're able to identify the market structure, which is number 1. We're able to mark out our key level where we entered, where we're able to set our break even, and presently our TP is still high. Like, okay, you can actually see where we have our TP here, and I hope it gets there as well. Looking at what we have here, okay. So please, if you enjoyed this video, make sure to give it a thumbs up. Subscribe to our YouTube channel, like, comment, and share this video so as to help us get more views. Thank you, and God bless you. My name is Ayim Israel Uchechuku, your Forex coach. See you in our next episode.